Okay, folks, good morning and welcome to Swing Trading Today. I titled this commentary Stock Market Correction question mark with a little emoji there. Very, very cute of me. I like it. And we'll talk about whether or not we are entering a correction. What am I concerned about as we are short the market? Why would I be concerned? Because technically the stock market does not like short sellers. So it is the 4th of March, 5:53 in the AM, Eastern Standard Time. Let's get to it. What we're going to talk about today, besides the question of whether or not we are in a stock market correction, is what am I worried about? What's happening today? And that is Jay Powell. Jay Powell will be speaking today. That will be a huge topic of conversation, besides the fact that overnight you saw the repo market get whacked with a drop in the 10-year Treasury yield. And for whatever reason, it's not being reflected in the price of the bonds. We'll talk about that in a moment. We will also take some chart requests. We'll go over the pre-market activity. Before we get to it, I need to go over our excellent sponsor, and that is the folks over at TrendSpider. Folks, automate your grunt work, speed up your analysis, and improve your accuracy with automated technical analysis. And the one thing, I was going through this earlier, that I think that if anybody goes through, you really need to go and take a look at their alerts. You could set up alerts using Fibonacci's, complex technical criteria without knowing how to write code. These are pre-built. These are scanners here. And you can set up your alerts to match your scanners. And you also get alerted through SMS and email. So if you have a day job, those alerts fire off real time. They're not delayed. Thinkorswim at times delays my alerts, and it ticks me off because I'm not always looking at my computer. So if you're a trader and you're going about your life doing other things because you're a swing trader, not a day trader, you need in this case, they have ultra reliable, not just reliable, but ultra reliable SMS, email, and in-app alert notifications. TrendSpider, 35% discount code below. Automate your technical analysis and go about your life. Stop staring at the charts. Eliminate the impulse buying and selling that destroys many traders. So please check them out. 35% discount code below. Let's get to it. All right. Overnight, this came out just before midnight Eastern Standard Time. A huge move in the repo market impacting the 10-year yield. Now, given this drop overnight, you would have expected to see a rally in the 10-year bond, which we kind of got, but nothing to this magnitude. I mean, this is a huge, huge move overnight in the 10-year yield. But when you take a look at the price of the 10-year bond, I mean, yeah, we drifted up higher, but nothing to that magnitude. So I'm a little bit confused. I'll be frank. I know the impact of bonds on equities. I'm very, very good at that. The mechanics, how do I put it? I guess the mechanics of the bond market, I'm not completely proficient at. So I would have expected a drop in yields, such as we saw overnight, to have seen a huge move higher, or lower, I should say. No, higher, in bonds. So, big question mark. We didn't get it. And if anything, it looks as though we may get a continuation breakdown on the 10-year Treasury note. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. So when you look at how equities are responding to a slightly down 10-year Treasury bond, it's not good. The Russell 2000 in particular, of which we are short, is down spot ate 3%. We have not yet confirmed a breakdown, a confirmation breakdown, a trend reversal on the Russell 2000, but we're very, very close. We did break the rising lower band of support on a daily chart on the Russell 2000, and the close yesterday was just a complete bloodbath. Now, what did break to new lower lows and is probably heading significantly lower, the NASDAQ 100 or your triple Qs. They are down, not as bad as the Russell 2000, but they have been beaten like a unwanted stepchild. And we are down another nearly spot 7% on the morning. I think that prior to Fed Chair Powell speaking today at noon Eastern Time, that we may in fact get a rally into that news. The question is after he speaks, do we sell off? Because what is widely expected is that Fed Chair Powell is going to come out and announce an equivalent of Operation Twist. You have to go back to Bernanke with Operation Twist. And that's to boil it down, the Fed will sell short-dated maturities and buy longer-dated maturities, thus manipulating the yield curve. And that should serve to stem the rise in the yield curve, which is bearish for equities. Now, if he announces that yet equities sell off on the news, then the Federal Reserve is losing the narrative. And that's when things get real fast. So NASDAQ down on the morning, but be aware. Powell speaks at noon. A lot can happen. So I may feel good being short right now. That doesn't mean I'm going to feel all that good by 9:30 a.m. this morning. The S&P 500 on the verge of breaking down here. We are a stone's throw away. In fact, we did break down to new lower lows. We've been putting in lower highs, not really confirming a breakdown to new lower lows. We didn't do it here. We didn't do it here. We bounced back. Do we do it today? Maybe. Let's take a look at comments. I didn't say good morning to anybody. Sam. Hey, brother. Big Bear. Paul. Good morning, all. What else do we have? Let's take a look at the U.S. dollar. Now, the dollar is really moving up. We're down this 4-hour bar, which opened up at 5 a.m., but we're still in a strong uptrend, intra-period anyway, intraday. And we did see a good reversal bar yesterday, which was Wednesday, versus the big down bar on a daily chart on Tuesday. So we have a new daily high, and that does not bode well for, in particular, precious metals. Gold is certainly at the top of my list for a commodity that may get hit this morning. Let's take a look at gold. You know, when I went to bed last night, gold was down about, I don't know, I think it was about $8 the ounce. And we have bounced back here. I got to say, this is not horrible price action for gold, given the fact that the Dixie, the dollar basket, is now trading with a 91 handle. We are finding support at 1,700. If this breaks, you can already see I have an alert set here. If this breaks, I think we're going down to 1,650. Ideally, that's where we're going. And the reason why I say ideally is because I want to buy more gold stocks. I want to buy more silver stocks. But I want to do it at a more firm support level. Here, now, with a rising U.S. dollar, and rising yields, while the chart looks good at current, it may not hold. So I'd like to see strong support hit on a historical basis and then see a reversal on yields and or the US dollar. More importantly, the US dollar. Big Bear. Added some positions earlier. When do you think would be a good time to add again? It's tough to judge. Are we talking about short positions, Big Bear, or long positions? And it really depends upon, if it's long or short, it really depends upon whether those positions are technology or other. I'll wait for your answer before I answer your question, because it's important. Because yields have a impact negatively on technology when they rise, but a positive impact on the financials and energy when they increase. You want to get long tech. You need to see yields stabilize, if not move lower. And you may get I would wait until after Powell speaks, because I'm going to harken back to last Tuesday, Wednesday. And last Tuesday, Wednesday, I've said this before, and I apologize if I'm repeating myself, but others may not have heard me say this. If you go back to last Tuesday and Wednesday when Powell was speaking, he couldn't have been more of an uber dove, right? He was no interest rate hikes for the rest of your life and your children's lifetimes and your grandchildren's lifetimes. That's how dovish he was. But what did yields do? They broke out. They moved up higher, and they hit a high of 1.6% on the 10-year yield before backing off. So when I was looking at that, I was saying, you know what? It reminds me of when we had the COVID correction and the Federal Reserve was trying to restrain the markets from selling off, yet nobody was listening until Congress and the Fed got together and they were starting to talk about bailouts, stimulus, blah, blah, blah. So I'll be watching the markets post-Powell, and I'm making the assumption that he's going to come out with a new, they may name it something different. They're going to rebrand, repackage, make it sound like it's the best deal ever for the markets, a new Operation Twist. If they do that, basically yield curve control, and the markets still sell off, that's a problem. And and if bonds move up higher, I would stay away from technology, because they do not like rising yields. So that's gold, and let's move on to silver, of which we are also long of. Silver is weak, down 1.5%. The VIX up 1%. We're putting in a higher low. Oh, and by the way, folks, I didn't mention tonight, Sunday. I'm live 2 nights a week, Sundays and Thursdays. So 6 p.m. Eastern Standard Time tonight, which is Thursday, of course, as you are well aware. I will be going live. We'll talk about the price action of the stock market on a closing basis. We'll talk about the Federal Reserve and what happened after the Federal Reserve chair speaks today, how the markets reacted. So join in. Click the bell button, or I have an email list down below where you get alerted 15 minutes to a half hour prior to us going live. We hate spam too, so don't worry about getting spammed. So what we're looking at here is the intra-period 4-hour chart of the VIX. We'll be looking for a breakout above 28 on the March contract the VIX futures contract, right here. If we get that and we begin to consolidate, that sets the stage for a move higher. Right now it's looking bullish, but we're in a trading range. So anything can happen. It's the volatility index. Therefore, it's very volatile. What looks bullish right now can turn bearish very, very quickly, especially when the S&P has yet to roll over and break to new lower lows. So we may be short, but we are not arrogant by any stretch of the imagination. What else do we want to look at here? Let's take a look at ag really quick. I'm not going to go over all of ag. Corn pops out first. Corn is break. This is a rounding top on corn. So you could see that we were in an uptrend channel. That uptrend channel has broken. So we're getting a little bit of a reprieve on ag prices. And that's probably due to yields in the dollar moving up higher. But if that trend reverses, expect a resumption of the rally in agriculture. This is wheat. We have a double top on a 4-hour time frame. It's important when I say double top to put that double top into perspective. It's a 4-hour chart. All right, so it's not as it's more volatile than a daily chart. So we have not broken down to a new lower low at or around, let's call it 620 the bushel. Here is your double top. And until we break down, I shouldn't even be using that phrase so loosely. We're in a consolidation. And here's the upper band of your range. Here's the lower band of your range. And until we break to new lower lows below this lower band in red, we're simply in a trading range. That's it. Soybeans really quick. I know this bores some people about why does he go into ag prices? Why is he going into all these crazy metal prices? The reason is that we're always trying to get a feel for what the markets are telling us about inflation. Are we seeing pockets of inflation? Meaning inflation in ag, but not in the metals. Inflation in lumber, but not in ag. So it's important to see whether or not you have broad-based inflation. And we've been seeing it. We've been talking about it for quite some time now, well before yields began to blow out higher. And we were warning about it. So soybean prices still looking pretty healthy. I want to take a quick peek at lumber prices. Then I need to go to stock chart requests. Actually, you know what? Before I do that, I want to go to light sweet crude. If crude goes, sayonara market. And it's not looking wonderful for crude this morning. Head and shoulders set up. Left shoulder, head, right shoulder. Here's your neckline. Let's go back here. Here's your neckline. If we begin to break down below 59.57 the barrel, that marks a lower high and then a break to new lower lows. So beware of light sweet crude. Energy has been holding up very well. The banks have been holding up very well. You take one of the legs out from that two-legged stool and this market comes under a lot of pressure. Don't forget, the frackers are subject to a lot of pressure due to the fact that the new administration does not like the frackers, and you need to watch the high-yield debt market. Why? Because high-yield debt is very extended, and they are the ones that have been financing the frackers. So if the frackers come under pressure, expect high-yield bonds to come under pressure. Let's take a look at copper really quick. Copper getting hammered. Wow. This is a major break for copper. Here's the head and shoulders setup. Left shoulder, head, right shoulder, break. Right here. The power of lower lows and lower highs, man. Once we broke this support level, it was all over. Program selling. Huh. Interesting. I'm surprised to see that with copper. Copper just hit, I think, historic highs. I really just want to take a look at lumber prices. I forgot the symbol of lumber. All right, I'm not going to bore everybody trying to find this. All right, I'm going to bail on that so I don't bore everybody to tears. All right, let's take a look at some chart requests. I have a few minutes left. That's not what I want. All right, again, folks, we'll be using TrendSpider, 35% discount code below. I have to go over for, I think Tuan had a few requests. VIAC. Very nice chart. But here's the power of the automated trend lines, folks. You click a button. Right? Would I buy these shares? This is a monthly chart. Would I go buying these shares right now? It looks pretty good, right? We're not that far off the highs. It's outperforming the overall market. But would I buy? No. Why? Click of a button. Pop. Monthly resistance right here. This is what TrendSpider does. It keeps you out of trouble with the click of a button. This is a weekly chart. The weekly chart looks really good, but what I like to do is overlay the monthly chart on top of the weekly chart, and it shows you on the weekly chart you have monthly resistance above. Would I buy here? No. Beware, you have a lot of resistance above. So if I were not to buy here, where would I buy? What I would do is I would look for, we may get support here at 61.16. I like it better on an overshoot down to $60.16, give or take a dime. And we'll create an alert, touch, bounce. Keep a little sensitivity. And we'll keep this active for a few weeks, a couple of weeks. So our alert is set. Set it and forget it. Let's go to a daily chart. You can see how on a daily chart, the shares responded to that monthly resistance level above. So in this market environment, if we really begin to sell off here, if you're long, you have profits, this would probably be a good area to make some of those profits real. But if you're looking to enter, I think that the support level down here at around $60 a share is attractive. We may have another support level here. But you know what? I would round it down. I would go to $60 a share, give or take a few dimes. So I think the run has been nice with VIAC. Maybe it'll break out. But in this market environment, I would bet against it. If the market's selling off, you have to make the assumption that this resistance level at current will probably not break out. So I certainly would not buy in advance or on expectation that we're going to break out above major resistance above. So VIAC, I would avoid at current. I would not short it. Globus Medical, monthly chart. Again, folks, the power of automated trend lines. Pop, there you go. These candlesticks here and here, we're telling you, you have topping action. In essence, the market was sending you a signal. There are sellers above at 68 bucks a share. This month, we are breaking support. It's early in the month. We could rally back here. So let me preface what I'm saying by the fact that it is very, very early in the month. For all I know, we're breaking out this month, right? So let me caveat what I'm saying. But at current, the known is that we are trading down below critical support. We have taken out the lows of last month. Therefore, it goes on a watch list. I would not buy here and now. This is not a dip to be bought, especially in this market environment. Now, where we're finding support is where we have rising moving averages, and we have some support from back here in late January, early February. If that breaks, we're coming down to right here where there's an automated trend line. Again, click of a button, right down here, let's call it $57 per share. I like this support level. If I had to hazard a guess, that's where we're going. Keep a little bit of sensitivity. Okay, so we're good to go here. I would not buy the support level. Maybe it'll hold, maybe it won't. Judging from the monthly chart, this support level is probably not going to hold, especially with the market coming under weakness. But again, I want to hearken back. I used that word twice today, hearken. I don't think I've ever used that word before. I want to hearken back, third time, to Powell's testimony today. And remember, the market could rally on that testimony. Daily chart, we broke, again, power of the automated trend line. We broke support yesterday. I would not be a buyer of these shares. I would avoid at current. Watch that weekly support level. PTON. Yeah, Peloton's in trouble. We went over this one yesterday. I think we're going down to, at a bare minimum, 102.40. I really like 92.40 because we overshot to the downside the last time we did a pullback. That was back in November. Note how we bounced off of it. So we have a lot of buyers down there. Now, 102.40, it may hold. But I think that you're going to need to see yields pull back and a rally in the overall market. Watch the 10-year yield. Weekly chart at current, I'm far more concerned with the weekly chart than I am with the monthly chart because the monthly chart we can still recover. On a weekly time frame, there's a lot of damage that's been done here, a tremendous amount. We've broken support. We broke it to new weekly lows. This is that third candlestick. Usually they come in threes. Then you find your support level. Then you begin to bounce around a little bit. So I think we can move lower here. I have an alert already set down at that preferred support level at, call it 92 bucks a share. We'll round it up. Note how I ignored these first two. That may change if we see a drop in the 10-year yield, a rally in stocks. Then we'll have to reevaluate. Okay, do we want to pay up more here? Should we want to get involved with PTON? That's the big question. Let's wait and see how the markets react to the Fed. Daily chart. Power the trend lines, folks. Take them off. Click of a button. We have support here. We close right at it on a daily time frame. Does it hold? We don't know. We're not that smart. All I know is that this is a pretty bearish chart. We failed to hold a rally here, a dead cat bounce. We broke support on the second, follow through to the downside on the third. I think we get another follow through to the downside this morning. We may reverse to close higher if Powell cheerleads the market higher. We don't know what's going to happen until that closing bell. So if you're looking to open up a position here, I would wait for a sell-off to key support. Set your stop. Keep it very, very tight. Keep your position small because you're buying on spec. And if we rally to close back above these two support levels, then it becomes very interesting on a bullish key reversal bar daily time frame. Right here, right now, path of least resistance remains to the downside. Be very, very careful. Robert, SNX. SNX. This is a first timer for me. Ooh, Bollinger Band squeeze. Potential. Let's go to the monthly chart first. The monthly chart looks very, very good. I've never looked at this chart before, but I can automatically tell you where there is support. Again, power of the automated trend line. Pop. There you go. Now, what TrendSpider is not picking up is the fact that, because there's not enough data yet, is that we have resistance right here. All right, it was resistance in 91.92. Call it $92 per share. Resistance in January, then again in February. Attempted to break out this month, failed. So this stock becomes a buy if we're able to rally through and close above $92 per share. I'm not going to set an alert on a monthly time frame. I will set it, though, on a weekly time frame. And I don't care about anything except for whether or not we close above that resistance level. I don't care if we're above it on a 10-minute time frame, 30-minute time frame. We're not day traders here. I care about a close above resistance. That, to me, would be a buy signal. Daily chart. So I mentioned earlier a Bollinger Band squeeze. These are fairly tight Bollingers. And you can see how this raindrop chart, this is a mixture of volume-weighted moving average and VWAP, this symbol here in blue. That's akin to a doji star formation, like right here on February the 17th on your normal candlestick chart. This is a sign of indecision, a sign of a potential trend reversal. So we were moving up higher. We flashed that blue doji. What did we do yesterday? We broke down below support. So this is a breakout point failure. So we may pull back to these rising moving average or lower. You got to wait, or I would personally wait until we recaptured support, closed above it at $92 per share. I can't say it. AMVAS007. Okay. Appreciate your review with EXPE for bearish swing trade. We'll leave off with that. Big Bear, did you have anything? Big Bear is one of our members. Expedia Group has really been performing very, very well of late. It's a reflation trade. We don't need log on. So despite the market weakness and the fact that we are down at current on the month, Expedia is showing relative strength. It's behaving very, very well. So we have a breakout. Again, the power of the automated trend line. All right, click of a button. Pop. Here's the breakout in February. We're down so far this month. The first thing that jumps out at me is, do we retest this support level? And I know you're saying that this is a bearish trade. I'm not, to get short, you're welcome, Big Bear. To get short of any issue, you have to have an edge because you're fighting an uptrend. And remember, people hate shorts. The markets hate shorts. So, excuse me. So the question becomes this: what's your edge over other traders? The market is telling you that there are far more buyers than sellers. How do we know that? Because we're in a confirmed uptrend. All right, this is a monthly chart. And look at this breakout out of an ascending wedge formation. That's pretty bullish stuff. So I'm not viewing this at current, and I'm open to your opinion about what the edge is to get short relative to, in this rising interest rate environment, a big, fat, overbought tech stock like Microsoft, for instance. I know that sounds crazy, but go to a quarterly and yearly chart of Microsoft, take a look at the RSI, and you'll see that RSI is above 90. That's my edge. That's why I'm short of the triple Qs, because they're very overvalued. Now, Expedia may be expensive now. The however is, if this economy does open up, does that PE ratio drop like a rock next earnings report, and all of a sudden the stock looks cheap? That's why the shares are moving up higher. Remember, Texas, Mississippi, they've taken off their COVID restrictions. They're opening up. Now, that doesn't mean much for the overall economy, Mississippi coming off of the COVID restriction list, but Texas, that's a huge, huge bet. Expect Florida to follow, and it's like a set of dominoes falling. So if that continues, that's the wind at the back to the long side of Expedia. So on a weekly time frame, while the S&P 500 is down sizably, EXPE is down marginally. It's down about 1/3 of a percentage point. I'm not sure what SPY is down. Let's take a look at it. SPY is down and breaking down, no less. We're down over a percentage point. So technically, Expedia is outperforming the S&P 500 at current. I would prefer to see a stock which is underperforming, at least performing with the S&P 500 to get short of. Right here, right now, if we reverse on the S&P 500, expect Expedia to reverse quicker. Daily chart. Yeah, I don't see a short play here, because this is a very, very tight consolidation. So it all goes back to what's my edge. Are we seeing a setup for a breakout or a breakdown? I would argue that we're seeing a setup for a breakout. Now, when do I change my tune? Well, if the market settles off and we close down below 152 per share, then Expedia comes under pressure. But it's a high risk short. So I would be careful here. of shorting Expedia. This is not the trade that I would want to put on. I would look to actually buy Expedia if the markets reverse and begin to move up higher and we begin to break out above 167. And guys like me are out there right now. We're watching this consolidation and the outperformance of Expedia relative to the S&P 500 at current. So just beware. I wouldn't short this stock yet. On Fast Money, they're talking about 30s on the GDX. I don't know. Those guys have gotten gold wrong so many times, or the miners, I should say. Where did we close yesterday? I frankly think that, and I could be wrong here. All right, we could always think that we're wrong. We need to stay humble in this business, or else we get taken to the woodshed. I think that they're missing the bigger picture. The longer term view here is that the Federal Reserve, they need inflation. Why do you think that they're talking about that? They went from 2% target to an average of 2% on inflation. They need inflation, manageable inflation, not out of control inflation, because they want to inflate away all of our debt. They need it. And all the money printing of the US dollar is extremely bearish. So if you see the velocity of money pick up, you're going to see inflation pick up. And if the dollar begins to decline, where is money going to rotate into? I'm not buying that Bitcoin is the new gold. It's going to rotate into gold. Gold maintains your buying power. If you want to make a profit and have an investment on inflation that returns you money, not just preserves your buying power, you need to get into the gold miners. So I'm not buying that we're going to get a break here. Maybe the line in the sand is $30 a share on GDX, and I would avoid it, but it sounds like they're taking a cautious approach, and they're betting that GDX or the GDXJ is going to break down lower. Maybe it will. I think 1650 is truly the line in the sand that we need to watch for gold, because there's a 94% correlation between the gold miners and gold at current. That changes from time to time. So if we rally on gold off of 1650, expect the miners to follow. I'd be watching the price of gold rather than the gold miners. As goes gold, so goes the miners. We'll leave off with BJ for Paul, and I got to get going. And don't forget, folks, we're going to be going live tonight, 6 p.m. Eastern Standard Time. Don't forget to like, subscribe. You know all the good stuff here. BJ's Wholesale. They've been trying to break it out, Paul, and it keeps failing. You know, if they manage to close it above, let's say $40.50 to $41 per share, it becomes interesting. Really interesting, because that would be a monthly breakout. The weekly chart, again, power of the trend lines. I need to keep illustrating this. We are breaking down below key support levels. I wouldn't buy it. I wouldn't short it, because you have rising moving averages and support levels below. Daily chart. Now, on a daily time frame, let's take the automated trend lines off. Note how yesterday I'm not going to use the word reverse, but we did rally off the lows right at this rising support level. So might we get a rally? Sure. If you're dead set on opening up a trade, fine. I would just use a stop right below yesterday's lows as my stop loss point. And I would stay very small in this trade, because it's pretty speculative at current. Not only does it not become speculative, it becomes more of a longer-term investable trade. I would refer you back to the monthly chart and a breakout above this resistance line in red, and more importantly, at least on a weekly time frame, is a close above this resistance level at around $40.50 to $41 per share. And with that, folks, I'm going to say everyone have a profitable trading day. Be safe. Hit subscribe, like. Join us tonight, 6 p.m. Eastern Standard Time. Be well.